All right, how's it going, everyone? I hope you're doing well. I'm back with another video today. I'm just gonna be breaking down a trade that I took this morning, and this is one of my bread and butter strategies. In fact, it's probably one of my most consistent strategies by far. It's just a setup that presents itself probably 5 to 10 times on average a month, sometimes more, and there are probably more than that each month. However, there's a lot that are not that great, and there's certain nuances that make me filter that out. And this one even today was not like A plus, and I'll explain why later in this video. But this is what I consider to be a very solid small cap short in a trade that I think has a lot of edge. In fact, it kind of bothers me to even talk about it a little bit because I think that it's a really good trade. And I'll just dive into that with you guys. So starting out, I traded MTVA this morning. Firstly, how I actually had this on my watch list, I use a scanner called StockFetcher. You can see it in one of these tabs up here. And it's just, you go on here and you can visually scan through these charts. I have a certain code that I use for one of these scanners, and then I just manually go through it each day. I'm sure I could be a little more efficient about it. However, I enjoy the process of scanning. It also makes me better over the years, for sure. Just scanning through 1,000+ charts a day. Honestly, I probably scan through 2,000 a day. And over the years, I mean, when you're getting 10,000 reps a week, obviously you get really good at this stuff. And so this was already on my watch list, I believe, on the 20th. And so I was just waiting for what I consider to be an opportunity for a short. And what that is for me is some type of major intraday run. So, for example, after this Wednesday, May 20th, if I had seen the next day the stock went to $5 in one day, ideally in a pretty short window of time, I may have been starting to get short. Or if I see some big type of gap, which is what we saw here, I start to get short. And so that's really how I'm identifying the stocks that I trade. I'm using a scanner. I'm scanning through it manually after I have some code that identifies specific charts and variables that I like to see. And then from there, I'm looking into the actual variables of the stock. But what's putting it on my watch list is the daily chart. The daily chart is where I make all my decisions and gives me the context and confidence to even think something that is in play for me. And so MTVA was in play because it had it actually reported earnings here, had some type of consolidation, and then squeezed up on no major news. This was a pretty weak headline. I can't remember. Oh, actually, we can check what it is. I think it was this day. Yeah, they put out this one headline, and it really is, it's not very meaningful if you're familiar with biotechs at all, and I just didn't really care about it. There's only one headline in here, which typically means it's not that strong of a headline. When you see something that's actually fundamentally changing for a company, there will be 50 of them, or 50 of the headlines in TradingView, or 20 of them. And so I already knew that wasn't a big headline. And so what do we have? We have the big move on earnings from 93 cents to about $1.23, which is, decent percentage. It pulls back, and then it gaps up, and then just starts running on that news catalyst. I don't see this, again, as fundamentally changing news. I see the thesis of this run being that someone that was short this stock, right? Because look, it's been downtrending for a long time. Someone is short this thing, and now they are covering and getting squeezed. Does that make sense? Or there's two things happening. People are taking profits on their shorts, or someone new is short, say, in these prices, and they're starting to get squeezed out, and they're forced to cover. Something like that is probably what's going on behind the scenes. And so when it comes to this trade, I just want to make this very clear. Stock selection based on daily chart using StockFetcher, right? That's how I build my scanner. And I give my scanner to everyone who's actually in my program, just to be clear. It's not rocket science, but there's definitely a process to it and a science that I've gotten better at and have my own twists on, you could say. But in terms of, again, after I identify this stock as something that I possibly want to trade on my watch list, I'm then looking into these nuances of why is it running? So that's the next thing I'm asking myself. Why is this stock running? And typically there's going to be a few answers, right? It's going to be, okay, there's a fresh news catalyst. It's a hot sector. Those are really two very important ones right there. or it's going to be some type of short squeeze, like I'm explaining to you guys, or it could be a reverse split. That's another thing, which is a completely different video. It could be, I mean, there's a lot of different things, but you start to understand over time what is actually driving the stock, okay? And in this case, I believe it's a short squeeze. And you know, you're not always going to have the answer to these questions. You're just trying to make a good thesis and understand the psychology and the participations underneath the actual action, right? Yes, this is a chart, but we're not looking at a pattern. We're looking for emotion, we're looking for extremes, and we're looking for, you know, what is the actual transactions underneath? What's going on behind the chart? It's not like I'm saying, let me look for my perfect little 1, 2, 3 pattern. No, I'm trying to understand all of these details and nuances underneath the actual price action. And so we have an answer. Why is the stock running? You know, it's a short squeeze based on everything that we understand. And I would say that's pretty solid thesis, okay? And within that, you know, like I said, there's no major news. So that's a pretty important variable. You know, if you're going to bet against something, particularly on the short side, there better not be any major news that is fundamentally changing for the company. That's definitely not going to do you any good. And so, like I said, there's no major news in this case. We know why the stock is running based on what we understand. And then at this point, I'm looking at things like FinViz because I want to understand, okay, what type of stock is this? You know, if I have a poker hand, you know, I have to understand the other variables at the table. Oh, I spelled that wrong. Otherwise, you know, I'm pretty much playing blind, and it's the same thing with trading. So this is a biotech, which I already mentioned to you guys, something that's pretty important, okay? A lot of biotechs have a lot of institutional ownership in it. What does that mean? They can be harder to short in a lot of cases, okay? So that's initially what I was thinking when I saw this. However, if you look at the institutional ownership, it's 1.3%. That's really, really low. That means that this thing is probably going to have a really good fade, and it did have a great fade. The actual float is 3 million. It's low, but it's not insanely low. It's nothing that scared me, okay? And if you're not sure what that is, the float is just how many shares are publicly available to be traded. You know, when things start getting below 2 million, 1.5 million float, and especially in the 600, 700,000 range for a float, that's when stocks can be super manipulated and you can see massive squeezes. Like when something is super low float, it's definitely something I factor into my sizing protocol to make sure that I'm not over risking and putting myself in a position to get in a situation I don't want to be in. So with that being said, again, it's a biotech, it's a USA company. All these are important variables, and you know, there's more reasons for why they're important variables, but I can't break it all down in one video. So I'm not going to go too deep on some of those for now. But again, we talked about the flow. Obviously, this is like a very low market cap company. That's really all I'm looking at here. I just kind of want to see the institutional ownership, the type of company it is, the country it's from, and like no crazy short flow. That's really it. And so that's kind of what I'm doing. And then let me just write that for you guys. FinViz check-in. And FinViz is free, by the way. I've never even paid for it. I think it's a fantastic resource. I use it every single day. And so, again, we have a stock that's been selected objectively based on our watch list. We know why it's running based on our thesis. We understand it has no major news, and it's a company that we don't mind shorting. Do I love shorting biotechs? No. But I don't mind shorting biotechs that have low institutional ownership, because that just shows that big money's not really interested in it. And for whatever reason why it's running, there is no strong thesis. Like we said with the news, therefore it's probably going to come back down to a lower average price whenever the trade is complete. Does that make sense? So at this point, I understand this is a stock I want to trade. And if it gives me two things, a massive intraday run in a short period of time on high volume, or massive gap up, okay? And I define massive gap up as a gap up the size of one of these ranges from the prior day, like $1 of a gap up or 70 cents or whatever it might be, or the massive intraday move being like $1 or 70 cents or something like that in a very short period of time with a lot of volume going off near that top. That's something to me that would get me interested in shorting. And so I set an alert on this thing up in like maybe like the $4.30 area. And I got an alert on it this morning at about 3 a.m. whenever the electronic exchange is open. I think that's what it's called. I could be wrong about that, but point is, I definitely do a lot of pre-market trading, and that's where some of my best trades come from. And so, bam, we get a big gap up, and I get an alert this morning. So now I'm going to go down to the 1 minute time frame, which is where I do a lot of my execution. But again, I want to clarify that the 1 minute, the 5 minute, all these time frames do not matter for me personally until I have the daily context and the stock selection figured out, right? If you're in the right stocks and your thesis is right overall and the fundamental understanding on the bigger picture of where the big money is and what participants are doing, if that's correct, your entry and exit is less important. Understand? And so again, I'm going to go to the 1 minute and I'll tell you what I was seeing. So on the 1 minute, again, everything's fractal. So the same price action you saw on the daily chart is on these time frames. There's no special secret to it. This just allows me to see a more granular version of the action, so I can get like a better risk reward on the entry and see what's going on a shorter window of time. That's it. So don't overthink these time frame switch ups. I know that early on, like, the idea of time frames can be very, very confusing. It was like that for me at first, big time. So, but now it's like I don't even think about it. 1 second, I'm getting a sip of coffee. But anyways, a little off topic. So this trade, I got an alert at 3 a.m. this morning. So I was literally up. I went to bed late, and I went to bed at like midnight, maybe 1. I went to bed a little late, and then I got an alert at 3. I didn't really think I'd have any alerts, but I did, and I immediately hopped to my desk, and then I was up all morning. So I ended up taking a nap about an hour ago, and now I'm on the second coffee of the day. So that's where I'm at. Just wanted to tell you guys that, and we're back into the breakdown. So again, I get an alert at I think I had it at $4.30 this morning. So my phone just starts beeping like crazy. And then I start getting short. My first entry is like in here, add a little more there. And I'm being very wide with this, if that makes sense. So when I'm shorting in the pre-market like this, I'm measuring out the size of this move. And I'm saying, okay, if I want to risk $3,000, I'm going to risk $3,000 up to the $7 or $8 area. Okay. And that's what I was doing in this situation, and then I'm slowly adding based on how the price action looks at the time. And so, let's see here. If you look at my executions right here, I start shorting in the 470s, I add more in the 510s, 5.05, 480, and then I add my biggest size at 530, 540. I was very confident that this was the top. And my risk was pretty much up into, it's subjective, right? Like, if this had started to reclaim, I probably would have reduced a little bit, but I was planning to be very wide with this. These types of trades are really more about time than they are price for me. I hope that makes sense. I would rather be in this trade with a wide stop loss for, all the way until the open, rather than be super tight with it and try to make a bunch of money with it in a short period of time. I've just learned, for me personally, I'm better off trading time, not price in a lot of cases. I understand that my best trades, I'm going to be in them for a couple hours. So, I want to make sure I'm starting off slow. Hence why I take so many different entries and scale in, because I just know that I plan to be in it for a while and I want to build that position slowly. And so you see me ride this position all the way down, and then I cover at the open right there. Obviously, really good trade. I'm short in the 5s. I cover in the 3s. I think my average was 497. So, I covered at 370, the whole size. So I made 25% on this position. Obviously, that's amazing, right? Super good. And I definitely think I could have covered a little early down here at 360. But it's really no big deal. I feel like this was a fantastic trade. And yeah, so again, in terms of the entry itself, the entry, to me, this is exhaustion. When we see this big of a gap up this early in the morning, this is just, that's my favorite thing to short, massive gap ups. And, I can't fully give you a reason why that is. I would think that it's because people are getting blown out in these periods, or people are starting to take profits, or people have orders out there that are just going nuts. Whatever it might be, you just start to learn over time what is inefficient. And I find that there's a lot of inefficient action very early in the morning. Um, Most of the time, I find that to be true. I found that to be true for years. And again, I really hope that not a lot of people see this video, because, I mean, to me, there's a lot of edge in this. And it's, I really do, I really honestly hope that no one sees this video. I hope there's like 20 people that are pretty cool and loyal and not like genuinely interested in this stuff and interested in edge and being a trader. Like, I hope this provides value. I don't want this to be like some mainstream thing by any means, but this is a huge confirmation for me. These big, massive gap ups. I mean, there's just so much edge in them, depending on the instrument that you're trading. And if you're fast and you have the right tools, the right alerts, all the right things, you're gonna be able to capitalize on these. I mean, this is a massive move before the market even opens, right? I mean, I'm making 25%, in like 5-6 hours, and then I'm not even trading in the regular hours. The regular hours started here. I'm catching this whole move, in the pre-market. I mean, that's huge. It's a lot less crowded. And yeah, these are some of my favorite trades. So that's it. The reason I covered was because we were close to this like prior high here. And typically that is where I'm actually looking to cover most of the position. However, we didn't get there. And I was actually really surprised about that. Hence why I covered up in here instead of like right down here, because typically we get that move into that area there fully, and I really thought we were going to get it. Otherwise, yeah, I was kind of surprised, but I had to adapt and just get out, because I knew that the fact that this was reclaiming, it was just not it. This is where discretion comes in. I had an objective plan to take profits into this area here, 320s. But whenever the price action has a certain feel to it and it's acting a certain way, the variables change at the table. Or, I'm just comparing it to poker, because I think that a lot of newbies have played poker and it's easy for them to comprehend. When the variables change, you have to change. And so I do, and I get out, and look, it ends up, that was like the best possible place I could have gotten out, because look, it went up here, and then I would have gave back like, a good amount of money. So the fact that I got out there, obviously it was the right move. And as you can see here, obviously it looks pretty, like it was fantastic. And you have to have the speed to know that. Like, if you're 3 minutes late on that, you're losing, it depends what your size is, but for me it's thousands of dollars, right? I'm losing thousands of dollars if I don't get out within a 5-minute, 10-minute window right here. And so you have to know what you're doing in that regard. But yeah, that's really it for this MTVA trade. I'd like to clarify again what my process is. My process is pretty objective in terms of stock selection. I hope you guys understand that. Stock selection has always been pretty objective to me, because I think it's quantifiable. I think 80% of my stock selection process is objective, and then 20% is discretionary in terms of judging the news, the type of stock it is, have I traded it before, etc. And then I'm trying to understand why the stock is running based on all of my experience and just what I understand to be true about stocks and, yeah, the reality. I'm looking at news, I'm looking at FinViz to try to understand the nuances of the particular stock itself. And then I'm looking for confirmation on the intraday, which I explained already. So most of it is pretty objective. I'd say 70-80% of my process is objective. And then I have the 20%, 30% on the entry and exit stuff where it is objective. Like, I know what I'm looking for objectively, but for me to add, 10 times here and slowly get in, and for me to exit perfectly here, obviously there's nuances to that, and there's just experience, and it's definitely more of an art. It's like going to the plate in baseball. You have a good swing, but you have to be able to discretionarily judge the situation in the moment and know what to do from there. So, man, I hope you guys enjoyed this video. I had a really good time making it, and these videos help me too. They do. They help me reiterate my process and just become better and more precise. And so I love it. I'm very passionate about trading, as you guys can tell. And, speaking on my last video, I hope this channel finds the right people. Like I said, I'm not doing the whole P&L thing like I was a couple months ago. And I really realized that was just not for me. And so I hope that my content resonates with people like me, people that love the market, people that want to get better, people that strive, not only for the money, like, yes, I'm in this for the money, absolutely, but it's because I genuinely love it, and I view it like I used to view playing baseball or some of the other passions I had as a young kid. So it's the same thing, and I just hope this video resonates with someone and also teaches them a fantastic setup that I believe has tons of edge that they can extract money from consistently. So yeah, I hope you guys have a good Memorial Day weekend. Yeah, market is closed Monday. I will be enjoying my life the next 3 days. Got this girl I'm seeing coming to town, and got a couple dinners, and it's my sister-in-law's birthday tonight, so I'm honestly probably about to go to the mall, and then after that, go over to dinner and have a good time. So I hope everyone else does too. If we're not enjoying what we work for, then what's the point, right? So have a good weekend, everyone. See ya.